Okay, everybody, I am here today with Bob Bates from Bates Lending Group in Granite Bay. We've been talking for a couple minutes trying to dumb down some of this stuff for me to understand so that I can explain it to you, because mortgages, there's so much to know, and that's why I really value him. So some really cool things are happening, just happened right now, that are actually available today, even though they're supposed to be effective in 2019. And that are special to brokers, which he is, whereas big banks don't have them. So basically in lending, there are tiers. If you really just break it down to where if you only take out this much money, you have you can get better terms.
Exactly.
And if you take out more, then you have to pay a higher interest rate and maybe put more down, and it goes on from there. So there's conforming, which is conventional, then high balance, and then jumbo.
Yep.
Basically. There's a lot more to it than that. So what happened is that
Loan
balances just increased. So why don't you talk?
Exactly.
Okay.
So what was announced by the Federal Housing Finance Agency yesterday was they recently increased the loan limits that you're allowed to borrow. And this is Fannie Mae and Freddie Mac. These are conventional products, not FHA or VA or anything like that. So a conventional product through Fannie Mae or Freddie Mac, the loan amounts had increased. And what that means to you is you can borrow more, meaning you can take a larger loan amount out and get better terms, okay? What recently changed was the conforming loan limit in around these parts of the country was $453,100, and it recently increased to $484,350. So what that means is, obviously, before you could only get a $453,000 mortgage, and now you can get a $484,000 mortgage and get the same terms, best deal.
3% down.
Yep, and 3% down, okay? If you go and you exceed $484,350, you then go into a high balance category, which typically comes with about an eighth to a quarter higher in interest rate. But that allows you to finance up to $726,525. If you do go to that limit, though, you are required to put 10% down. What that means is you can, again, borrow a ton more, and you can avoid jumbo guidelines. So what that means is if you exceed $726,525, you're then in jumbo territory, which requires typically 10 to 20% down, very good credit scores, low debt to income ratios, and most of the time assets on top of your down payment. So sometimes 6 to 9 to 12 to 24 months of mortgage payments in some kind of asset account on top of your down payment and your closing costs.
Yep.
So that's a really big thing.
Yeah.
So what that means is, obviously, you can get better terms and finance more, and that's a good thing.
Afford more house. So if you have any questions, reach out, let us know.
All right.